Hello, it's Jeffrey Christian of CPM Group. It's about 11:15 in the morning, Tuesday, April 30th, here in New York. Gold prices and silver and platinum and palladium and copper are all off. A lot of other assets are off sharply today. We're going into a FOMC meeting, a very important Federal Open Market Committee meeting today and tomorrow. The markets are waiting to see what the Fed will say. They don't expect necessarily the Fed to do anything at this point, but there is a very anxious global financial system waiting to see what the Fed may signal it thinks. CPM Group's own view, which is probably close to what the Fed's view is that it's a wait-and-see situation. We have greater inflationary pressures than a lot of people had expected, primarily in services and foods. And those inflationary pressures partly reflect the fact that we have a stronger economy. So all those people who thought that there'd be a recession, 2021, 2023, 2022, early 2024, have put those expectations on hold. We don't think you should take them off the table. CPM Group thinks there's still a very good probability that we could see a recession late 2024 in 2025, given our analysis of the state of the global economy, the U.S. economy, European economy, Japanese economy, Chinese economy, and the political environment that we think could have a very negative impact on the economic outlook. But that's where we are. Now, prices have fallen. It's a very broad-based move, so it is what it is. Here's what gold prices are, and I have two price charts. I have one going back to 2019 to show you how high the gold price still is, and then I have one just this year that can show you how the price rose very sharply in March and then in April, and how it's still at very high levels, higher than it ever was before April. Even though it's sold off about $30. I think the price of gold is about $2,339 right now. There is the scope that it could fall further. I'll look at silver, platinum, and palladium prices in a little while too. Let's talk about why the markets are off sharply. Now, I did promise myself I wouldn't make fun of all those true believers out there who said, this is the real thing. Once the gold price broke over 2,300 and made a run over 2,400. And, we're predicting $10,000 gold and $3,000 silver tomorrow. I won't make fun of them. I think we can safely ignore them and all of the scary things that they say and talk about. But let's look at the reality and a rational view of what's going on. Why have prices come off sharply? Well, partly it's the economy. And as I said, it's not that we're going toward an economic collapse. We do have the risks of a recession going forward. We do have higher inflation, as I said, primarily in services and food. Oil prices have been flopping around. The spread between U.S. and European, between the WTI and Brent oil prices, has widened again. It had gone very narrow for some period of time, but it's starting to widen, which sort of shows greater concerns in the oil market about European and global oil supplies that are greater than any concerns about U.S. oil supplies. So you're seeing a divergence there. We're seeing inflationary pressures. Some other things are coming off. We're seeing signs of economic strength, and we're seeing signs of economic weakness. It's a very complicated situation. On top of that, you do have those political problems around the world, domestic, especially in the U.S., but in Europe and elsewhere as well, and international. And those political problems, probably are going to get worse later this year and into 2025 before they get better. And B, they're probably going to have a very negative effect on both the economic environment and financial market stability. So I think you've got those two factors. There's a third factor that you'd have to pay attention to. Prices have come off because they went up so fast. Yes, there are true believers who thought, okay, this is the beginning of the thing I've been waiting all my life for. But there are far more people who are rational investors who say, wait a second, the gold price was trading between $2,000 and $2,100 November, December, January, February. It got into this $2,100, $2,200 range in March. Then it got into this $2,300, $2,400 range in April. The price is up 20+% in 2 months. It's a good time to take some profits. So that's what a rational investor would do. And he would look at the economy. He would look at political environments. He would look at the supply-demand fundamentals, which are middling. And he would understand that when the gold price rises, people buy less gold jewelry. Jewelers use less gold in the jewelry they're making. Central banks, which are more price sensitive than private investors, will sometimes say, I'm not going to buy at $2,300 or $2,400. I was buying at $2,000, $2,100, or I was buying at $1,640 in November of 2022. I think I'll wait. Maybe I'm not going to see $1,640 again, but I may see $2,200 in short order. I may see prices below $2,200, and that might be a good price to buy. I might see prices actually below $2,100. So we've been saying that we thought that the price could weaken April, May, June, July, August, and then strengthen in the final 4 months of this year. And we still say that. And we say that because of our economic analysis, because of our precious metals analysis, looking at supply and demand trends in the gold market globally. And we look at the seasonality of gold prices. Gold prices tend to be strongest in January and February. That tends to linger into May. You have a period of weakness when investors and jewelry manufacturers and some electronic component manufacturers go on vacation. Some of those factories literally shut down, take inventory, clean up their system, collect the gold dust that's built up on the walls and the floors and the equipment, and take a couple weeks off. So you have some seasonal weakness in fabrication demand and investment demand in the summer months, which tends to be reflected in lower prices. So there are any number of rational investors who are saying, let me look at the gold price, and yes, this is great that as a gold investor, the price is rising, but it could come off. It's gone awfully far, awfully fast. It's not like the world's collapsing. There are a lot of problems out there, pages and pages of bullet items listing those. But there's also some seasonality there. There's an ebb and a flow to market prices, unless they're regulated by governments and say, oh, no, it's $35 an ounce or $42 an ounce. So there are a lot of rational investors who have backed away and taken some profits. And I'll talk a little bit about that at the end. Silver prices, very similar pattern, not quite as strong as gold. But again, we've seen the price actually on a longer term basis moving sideways pretty much between the second half of 2020 and the current situation. We did have a period of lower prices in 2022. Since March, we've seen the silver price ratchet higher, and then we've seen it ratchet even higher than that over the course of April, and now it's come off. And again, as with gold, you're seeing some profit taking, you're seeing some hedging, and you're seeing some investors saying, I'm going to wait to see how low the price will come if it'll come off. The same seasonality is there. I should mention this seasonality chart is in CPM Group's Gold Yearbook that we launched in March. You can buy that Gold Yearbook for $160. That's a small price compared to an ounce of gold. And you could learn a whole lot of really valuable fundamental information about gold that might help you be a better investor. Our silver report is coming out in May, and our Platinum Group Metals report will be out in July. All very worthwhile to understand the markets, not only for investors, for producers, refiners, smelters, central banks, governments, and others. So silver prices, very similar. You do have the FOMC. They'll make a statement tomorrow. What the Fed will do and say is important. We all kind of think we know what they're going to do and say. What's really important is how the markets will interpret it. And that we don't know. So we'll be looking at it, and we'll probably come up with trade recommendations either late tomorrow or Thursday morning after the Fed has made its statement and the markets have had a time to reflect and digest what the Fed has said and parse out what it might mean for future prices. I've told you what we think that our future prices are going to be. Platinum and palladium. Platinum has been moving sideways. As we speak, platinum and palladium are at parity on the New York Mercantile Exchange, around $984. Palladium had its day, 2019, actually going back to about 2005 or so, when it was like $180, $200 an ounce, up to very high prices in 2021, 2022. It's coming off. We don't necessarily see it as a long-term attractive investment. Platinum has some more power going for it, but it too has been relatively weak. I mentioned that we have a silver yearbook, but before I wrap up, I want to go back to gold. CPM Group this morning priced a 1-year gold hedge that would be suitable for a producer or an investor. It would give a producer or an investor or anybody else who wanted to take advantage of lower prices a floor price of $2,200 over the next year. A producer or an investor could sell gold at $2,200 per ounce at any point over the next year. Now, the crazies will say, well, $2,200, that's ridiculous. The price is $2,330 right now. Why would I agree to a $2,200 price? It's an option. If the price is between $2,200 and $2,400, according to the strategy that CPM Group structured and priced, between $2,200 and $2,400, you get the market price. You get the price of $2,200 as a minimum price. If the price goes over $2,475, you get the market price less $75. So let's say the crazies are right and the price goes to $10,000. You would get $9,025 per ounce. If the other slightly less crazy people are right and the price goes to $3,000, which is actually quite reasonable, you get $925. Right? You get almost all of the upside, but you get protection against the downside. If the price goes back to $1,640, you get $2,200. Now you say, well, what's the probability of that? Well, we were at $1,640 about 16 months ago. Right? 18 months ago. We've never been at $3,000. So when you start saying, well, what's the probability of profitability in a hedge that guarantees me that I can sell gold over the next year at $2,200, and if the price is over $2,475, I still get the market price, but less $75. You know, at $2,475, I get $2,400. At $2,600, I get $2,525. I still get the market price less that $75 contingent premium. That's smart hedging. Smart hedging for producers. It's smart hedging for investors. And there are companies, especially institutional investors, that are putting hedges like that on now. And that's one of the factors that's been reflected in the price coming off a little bit. You've seen an increase. But you see, you have to pay attention to this, because the way we hedge and the way we suggest our clients to hedge, you have twice as many calls being bought as you have puts. So the idea that this hedging somehow or other drives the price down is not valid intellectually, mathematically, theoretically, or empirically, because the hedgers who are protecting against lower prices are actually buying twice as many calls as they are puts. So anybody who tells you that these hedging actually pushes the price down, I guess they haven't been hedgers much. That's what I got for today. As I said, we will be coming out with our silver yearbook May 14th. Rohit and Carlos and I are working on it diligently now while dealing with the market. We'll come out with our Platinum Group Metals yearbook on July 16th. That's all I have. You can go to our website, cpmgroup.com. You can order the gold yearbook. Comes as an ebook, automatic delivery. You can pre-order the silver and platinum books. You can buy other research that we have. You can send an email to us at info@cpmgroup.com saying, I'd like to get on the right side of this market. Talk to me. This is my situation. Let me talk with CPM Group about how you guys can help me manage my exposure to precious metals and other commodities. Take care of yourself. Be good to those around you. Try to do something good for the world. And we'll talk to you later this week.